I am back with another market update for Southern California. What's up, you guys? My name is Michelle, and I help first-time home buyers and first-time home sellers save money, and I help make the process smooth. There's a link in the description if you would like to connect with me. You can book a call with me there, and I'd also like to invite you to sign up for my monthly e-newsletters. Again, all the details and also all the links to this video are going to be linked below in the description. Okay, let's dive in. Last month, we saw the housing market remain quite stagnant. Why? Primarily because mortgage rates have been on a roller coaster, staying on the higher side as we wrapped up in May. This validity isn't just a numbers game, it's also impacting builders' confidence too. With all this uncertainty, construction activity has taken a hit, but it's not all doom and gloom. On the flip side, the existing home sales market is showing signs of life. New listings have increased significantly, marking this the fifth consecutive month of double-digit growth of new listings. Right now, we're seeing more sellers getting comfortable with the new dynamic and listing their homes for sale. Here's the silver lining. With inflation hinting towards a downturn and the Fed likely to cut rates this year. Hopefully, there's going to be another meeting in July and September. Hopefully, they do that, but it's going to be dependent on, as you know, some, different statistics, and everything has to be in alignment. So hopefully rates do come down this year. Look for that maybe sometime in September. We'll see. We'll see. I know there's a lot of predictions out there, but let me tell you guys, there is a window of opportunity here. As more homes become available and as interest rates start to stabilize, it's going to be giving people a lot more confidence to come back into the arena, into the buyer's pool, and purchase a home. Now, when interest rates lower, I'm going to tell you right now, I feel like right now is a good window of opportunity to get into the market now. I know rates are 6%. We're going to get into what the mortgage rates look like right now, but there's not a lot of competition right now. I would say there are maybe, depending on the area, it's going to be subjective on the neighborhood, but let's just say, for example, there's 5 buyers to 1 home. As soon as interest rates lower, the buyer's buying power is going to increase. That means more buyers are going to be coming into the pool, which means there's 5 buyers to 1 house. Now there's going to be 15 buyers to 1 house. And what is that going to do? That's going to drive up home prices. We're going to get into this a little bit more, but California hit another all-time high, an all-time record of the median sales price. I don't know. This is kind of like, it's crazy, right? Because again, once interest rates lower, home prices are going to go up. So what would you rather? What would you rather? Would you rather have an interest rate of 7% and buy now? Maybe you can get a great deal on a property, especially if there's homes that are on the market for more than 60 days. We can negotiate closing costs and all of that good stuff. Or are you going to want to buy at a higher price with a lower interest rate when interest rates lower? It's kind of like that catch 22. Not to mention, and this is going to be another video I'm going to do for another day, but the NAR settlement, right? That's going to be changing the landscape of how buyers and sellers do business, especially with realtors on the buyers and on the buyer side. So that could be potential and a potential additional cost for home buyers. But after August 17th, when the new implementation comes in effect, all companies across the board, the entire MLS is going to have to restructure and change how compensation is offered, then that could be an additional cost for a buyer as well too. So I think personally, the window of opportunity to purchase a home is right now. So even though interest rates are 7%, because you can always refinance your interest rate. Got off on a little bit of a tangent, but I just wanted to talk to you guys a little bit about that, something up and coming. Again, I'm going to be making another video on that topic specifically, the NAR settlement. Okay, so let's elaborate on these topics a little bit more. As of May, the number of unsold homes hasn't really changed too much from the last couple of months. However, compared to May last year, things are looking a lot better now. We've seen more homes on the market now than any point within the last 15 months. And this trend of increased amount of listings has been going up for the last 4 months. What's even more exciting is that homeowners now are ready to sell their home. This means there's going to be more inventory and more choices for everyone looking to buy a home this year in 2024. And if mortgage rates continue to go down, right now we're seeing them go down a little bit. I'll show you. But if they continue to go down, we're going to see more homes coming on the market as well, mainly because people are going to sell their homes to purchase another home. And so they're kind of waiting in time in the market. So when we see interest rates coming down, they predict that more homes are going to be coming on the market as well. Let's get into the newer homes and the new homes being built. According to the last report from the US Census Bureau, the number of new homes being built has went down quite a bit. In May, the construction of new homes dropped 5.5% from April. And it's down a whopping 19.3% from May of last year. That's a significant decrease, folks. A lot of it is because fewer multifamily and apartment buildings are being built. Compared to last month, these types of projects fell by 10%, and they're down by more than half from last year. That's a huge change. Single family homes, like the ones most of us live in, also saw a decrease in construction. The numbers went down by 5.2% from last month and 1.7% from last year. Now, that's not as drastic as we saw from the apartment buildings and the multifamilies drop. It's not as drastic, but it's the first time that we have seen a dip like this since June of last year. Home builder confidence. Right now, home builders are not feeling too confident. They're being cautious, to say the least. Well, according to the National Association of Home Builders confidence has dropped to its lowest point since December 2023. Now, this dip is due to a few things. Number one, mortgage rates. They're bouncing around, and what's going on in the state of the market, it's making them difficult to predict what's going to happen. Also, number two, there's a shortage of workers. And number three, there's not enough land to build on. And because of these challenges, builders are finding it hard to sell homes. In fact, to attract buyers, builders are offering buyer incentives, like helping them pay for their closing costs, reducing their prices, switching gears. Guess what? California's median sales price has hit an all-time new high. Median home price sales have increased. The prices are increasing. So we are now at a whopping 908,040. You guys, and if we take a look over here in California, the median days on the market, meaning how many days does it take to sell a home overall in California? 16 days. New listings recorded strong double-digit gain. 18.6 in May 2024. So this is the year-to-year change in new listings. So as of last year, there's an 18.6 increase in new listings. And right here, basically, let me go ahead and put this in layman's terms for you guys. May 2024, there's 2.6 months of inventory. That means we are in a seller's market. Whenever the numbers, actually, let me bring something up. Let me show you really quick, just to give you some context. So it's all about supply and demand. Okay, so if we take a look at the bottom, you see right here, seller's market, and then neutral market, and then buyer's market, right? So whenever there's 1 to 3 months of inventory, we're in a seller's market. Whenever there is 4 to 5 months of inventory, we're in a neutral market. And whenever there is 6 months or more of inventory, we are in a buyer's market. Right here in California, 2.6. We are in a seller's market as a whole in California, but that's going to change depending on the city. And then whenever I comp out homes and I see what the fair market value is for a home, we look at California, and then we look at the city as a whole, and then we chunk it down to the neighborhood, and it's different. Sometimes it's night and day. So real estate is local, so always remember that too. Real estate is local. So that's why next we're going to go ahead and segue and dive into the county, and then I'm going to choose one of the cities within my coverage area, so I can kind of show you the stats and that. So let's continue diving in. So continuing the conversation regarding the median sales price, let me give you some more context with regards to that as well. So in May, the median sales price rose slightly 0.4% of an increase from last month, April, reached an impressive 908,040. Even more notable, we saw an 8.7 increase from last year. Yes, you heard that right. Prices are still climbing in this climate of where the market is pertaining to interest rates. Last month marked the 11th consecutive month-to-month increase of the median sales price. You might ask yourself, you might be wondering, why are home prices going up? This doesn't make any sense. Okay, well, let me break it down for you. The really big part of these booming sales are going to be the higher priced properties. Homes that cost $1 million or more, this right here, that's the driver of the increased sales prices, that specific niche of homes. And there's something else to keep in mind too. Historically, from May to August, California's home prices usually rise each month. This is normal. So if this trend holds, we're going to see even more increased prices and the median sales price within California to come in the future months. Next, let's talk about the economy. Is it slowing? In May, it looks like people were a little bit more careful with their spending, which does give us some clues about the economy. Retail sales did go up a little bit from last month and are higher than they were last year. But this increase was still less than experts were predicting them to be. One reason for the slower growth is fuel prices. They have dropped, which means people are spending less at the pump. But it's not just about cheaper gas. It does look like people are starting to spend a little bit less broadly. For instance, sales furniture and home furnishings dropped by 1.1%. Bars and restaurants saw a decline of 0.4%. However, and I am a contributor to this, online shopping is going strong with an increase of 0.8%. And also what's important to note is that people might be reaching their limit on what they could borrow as well. There's been a rise in credit card use, and it looks like people are falling behind in their payments. Looking ahead, if the job market doesn't pick up and people aren't expecting their incomes to increase more, consumers might continue to be cautious about spending. So you guys, really quick, I wanted to share something with you that could be beneficial for you. I always want to bring value to you guys, educate, bring information, and just be here as a resource. Like I said, if you guys ever need anything and want to chat about real estate or even get started with the process, the link is down below. But let me introduce you to a few services. And also, there is one new service and it's complimentary that I wanted to share with you as well. So let me bring you to my website. All right, here we go. When you get to my website, let me just go to the home page. You're gonna hover on services. And by the way, if you hover over resources, there are a lot of free resources here for you as well too. But let's focus on services for today. This is where you're gonna find where my specialties lie, the areas that I serve. And by the way, if you don't see your city, feel free to reach out to me and either way, because if it's close by, I may consider it, but it's all upon request. This right here is going to be ready to go. If you're ready to start buying a home within the next 3 months, you're going to want to go here. Sellers, I say within 6 months. So from between now and 6 months and between now and 3 months, this is where you're going to want to go. If you're thinking maybe about working with me, or if you're thinking about interviewing realtors and you want to request my credentials, this is where you would go and do that. This is my new service here. It's the then and now home analysis. You guys check this out. There is a video here that goes in detail, and this is the process. And there's a video that goes into detail about what that is all about. And down here, you have freebies for future home buyers and then freebies for future home sellers. So I just wanted to bring this to your attention and provide value for you guys. Okay, now let's talk interest rates. So this is today's mortgage rate. For a 30-year today, conventional financing is 7.6%. A 15-year is 6.47. 30-year jumbo loan is 7.27. 7.76 ARM is 7.04. 30-year FHA is 6.51, and a 30-year VA is 6.52. Okay, so now we're going to break down the county levels. We're going to get into Los Angeles County, Orange County, Riverside County, and San Bernardino County. Let's dive into the stats. All right, here are the stats for May 2024, Los Angeles County. Existing single family, these are resale homes, sales. How many homes sold in May in Los Angeles County? 3,540. This is a 0.3% drop from last year. The existing median sales price is $930,000 in Los Angeles County. This is a 10.7 increase from last year. Active listings, 8,010. This is a 33% increase from last year. Taking 18 days to sell a home in Los Angeles County, homes are selling for a little bit over 100% of the asking price, and 27.8% of the homes needed to do a price reduction. Okay, Orange County, 1,236 homes sold in the month of May, 12.2% from last year. Look at this, Orange County, median sales price is 1.42. This is larger than the entire state of California. You see, once you start getting localized, numbers start changing. So 1.42 million. Up 13% from last year. Active new listings in the month of May in Orange County, 1,561. They're up 21% from last year. It's taking 17 days to sell a home in Orange County. Homes are selling for asking price and just a little bit more, and about 26.8% of the homes needed to do a price reduction. Riverside County, May 2024. 1,335 existing homes sold, resale homes sold. Home sales are down 7.7% from last year. The existing single-family median sales price in Riverside is $650,000, up 3.3% from last year. 2,919 homes actively for sale in the month of May. Look at this, guys, up 47.3% from last year. That's a big jump for Riverside. It's taking these homes 30 days to sell. They're selling for the list price, and 36.1% needed to do a price reduction. San Bernardino County, May 2024. 714 homes sold in that month, down 2.6%. The median sales price is $489,000, up 7.5% from last year. 2,009 homes went on the market, up 51.6% from last year. That is so awesome. It's taking 23 days to sell a home, and homes are selling at 100% asking price, and 34.6% of these homes needed to do a price reduction. Okay, now let's move on to the city. We're going to look at stats within one of the cities that I serve. This month is San Dimas. Let's take a look at San Dimas's numbers and see how they did for the month of May. By the way, if you would like me to shout out and research your city, comment your city down below. All right, you guys, here we go. We are on InfoSparks. This is where realtors look at data. So let's go ahead and type in San Dimas, the city. Let's look at residential, and let's look at single family homes. And let's see the stats in May. Let's go to median sales price. In San Dimas is about $1 million, up 15.3% from last year. And look at the last 5 years. We could see when the peak of the market was within the last 5 years. That was June 2022 at a 1.1 million. Let's take a look to see how many days it takes to sell a home in San Dimas on average, or the median actually. 10. It takes about 10 days to sell a home in San Dimas. You guys, if you're looking to sell a home in San Dimas, here we go. Here we go. Months of supply. What type of market are we in? If you guys remember the chart that I showed you guys, 1.7. That's in between the 1 to 3 months of inventory for a seller, right? San Dimas is currently in a seller's market. Out of curiosity, I want to look at something. Let's go max. I want to say this is like 15 years that it goes down, and we can kind of look at the trend. San Dimas. So 6%, six or more is a buyer's market. Okay, San Dimas was in a buyer's market in 2011. 2011. So from 2008 to 2011, with the exception of this dip right here, going into a neutral market, buyer's market, neutral market, buyer's market, 2011, and then from there it took a decline. And this is that mortgage bubble, the crash, the mortgage crash that we experienced. This is all the results of that. So since then, so neutral market, let's see, going into a seller's market, 2012. 2012. And when was it like a hyper? During COVID, it was look at not even one, it was like 0.9 seller's market. This was like when interest rates were like 2%. Supply and demand, right? Okay, so without veering too far, seller's market. Seller's market. How many active listings? 27 active listings as of in May. How many homes sold, closed sales in May? 16. So in other news, I want to talk about a couple other topics. Number one, the topic about insurance. You know, it's very challenging for people right now to get insurance. You guys have heard about the insurance crisis that's going on here in California. So I just wanted to do a spotlight on it and give you some information about this. The state, here's an article that talks about it. The state's high wildfire risk has historically been a concern for insurers, but increased wildfire severity and rising home construction costs have finally pushed some insurers to a tipping point. Seven of California's largest property insurers, like State Farm, Allstate Farmers, USAA, Travelers, Nationwide, and Chubb, recently decided to limit new homeowners' policies in the Golden State, raising questions about the stability of the California's home insurance market. Allstate quietly paused writing new homeowners and condominium insurance policies in California. In an email, this is back in 2022, in an email to Bankrate, a spokesperson for the Allstate stated that the cost to insure new home customers in California is far higher than the price they would have to pay for policies due to wildfires, higher costs for repairing homes, and higher reinsurance premiums. State Farm said they will no longer accept new applications for all businesses and personal property and casualty insurance, but that it's a decision that will not impact personal auto policies. And then 2023, shortly following an executive order from Governor Gavin Newsom, California Insurance Commissioner Ricardo Lara publicized his sustainable insurance strategy, a multi-level approach to stabilize the home insurance market. Why are insurers limiting new policies in California? So with 7 major California home insurance providers either pausing or limiting new home insurance policies and smaller insurers following suit, it begs a big question, like, how did it come to this? What happened? Okay, so it says here, there's no one answer to why each provider has decided to pump the brakes on the California home insurance market. Rather, there are several key reasons. California's state insurance regulations, inflation, increased wildfires, and heightened reinsurance costs have all contributed to the current California home insurance crisis. Have you guys heard of, or did you guys know about Proposition 103 and the California Department of Insurance? If it's become increasingly expensive for some of California's major insurers to take on new California home insurance policies without limitations, why can't they just raise their premiums to adjust, right? Instead of just canceling everybody and saying, I don't want to, why don't they raise their rates? Okay, so here's the answer to that. The answer lies in a 35-year-old piece, California's Proposition 103. Prop 103 was passed in 1988 to protect insurance policy holders from unjust rate hikes across auto, property, life, and casualty insurance. Under Prop 103, insurance companies are required to submit a rate increases in excess of 7% for approval by the California Department of Insurance. Like any process that involves governmental approval, it typically comes with red tape. Proposition 103's stringent rate increase limitations keeps California's home insurance prices artificially low. So that's why. Here is what he is proposing to do here. The plan takes a four-pronged approach. Get major insurers to write policies for high-risk areas. The California Department of Insurance is looking for the top 12 home insurance companies in the state to commit to writing a minimum of 85% of their policies in undeserved areas, particularly in high-risk wildfire zones. Unburden the FAIR Plan. Homes and businesses that adhere to the Safer from Wildfires mitigation regulations will be given first priority off the FAIR Plan to return to their private market, to the private market. This part of the insurance reforms allows insurers to use the catastrophe modeling to set more accurate rates. Additionally, more home insurance discounts will be offered to consumers who have hardened their homes against wildfires. Update the FAIR Plan. This last point is primarily concerned with commercial insurance and aims to increase commercial coverages. Catastrophe models and rewarding mitigation efforts are something of a double-edged sword for consumers. On the other hand, it may be enough to encourage some California insurance giants to return to the market. So they're just not making money anymore. It's costing them too much. There's a lot of information on here. California home insurance options. Many of the best home insurance companies in California are still receiving new homeowners insurance applications. In fact, there are over 100 insurers writing home insurance policies across the Golden State while searching for a new policy. So here's my recommendation to you while you're in the home shopping process and you're getting pre-approved for your mortgage, also get pre-approved for homeowners insurance. Figure out who you're going to go with, who has the best policies, and based on the type of home that you're purchasing and the location, do that initial research as well too, because that's going to be super important to figure out, because there is an insurance crisis going on right now. A lot of the big giants have backed out into the business and are writing limited policies and all of that good stuff. So do your research initially so that when you do go into escrow, you're not going to have to cancel because the home cannot be insured for whatever reason, and or maybe the insurance premiums are too high for your debt to income ratio. So do that initial research up front so that you know exactly what to look forward to. And I would get some good recommendations from your loan officer. Okay, so here is an interesting one. So we talked about, the NAR settlement and the new changes coming on briefly. Like I said, I'm going to make another video of that. But just, in light of buyers now understanding that they're going to have to maybe pay for a commission, veterans getting VA loans, the VA says veterans are not going to be able to pay for their for their representation, for their buyer's agent. Right now, the VA has issued a temporary policy change on home loan buyer broker fees, saying that the veterans are going to be able to pay for their buyer broker fees in their closing costs. The U.S. Department of Veteran Affairs issued a circular announcement that a temporary policy change that will enable borrowers using the VA home loan program to pay certain real estate buyer broker fees when purchasing a home. The VA stressed the policy change was temporary, adding the department will monitor the effects of the settlement on the brokerage market before pursuing a rulemaking on the matter. They said, we always want to put veterans and their families in the best possible position to buy homes, to buy the homes that they want. And that's what this update is all about. Veterans using VA home loan benefits can now reasonably pay customary amounts for certain charges. So basically the VA wouldn't allow veterans to pay their buyer's agent broker fees. So that really limited the amount of homes that they could pursue, because some homes were not offering compensation for the buyer's agent's fees. So how would they get paid? if the Veterans Association was not allowing the veterans to pay for their fees. And so that was just a big problem that was happening. And so they temporarily are allowing the veterans to pay for any brokerage fees that are not paid for by the seller and incorporated into their closing costs. And so it's temporary because there's still, this whole NAR settlement thing is still unfolding. So as it unfolds, more information is going to be presented, and they're going to be able to make a final ruling later on down the line. August 17th is the final date, again, where all companies are going to have to conform to the new rules and the new laws and the new policies. Remember, the real estate landscape is always changing. Staying informed is going to be your best strategy. Whether you're thinking about buying, selling, or just curious about the real estate market and you want to stay up on current events and to see where the current real estate market is, it's important to keep an eye on interest rates, listing, and to subscribe to this channel because I'm going to keep you informed each and every month. If you haven't done so already, I'd like to invite you now to subscribe to this channel so that you could stay on top of the market. Every month I do updates just like this. And if you like this video, please give it a like. As always, I'm here to help you and to guide you. Thank you so much for watching. Have an amazing day. Stay cool. It is hot. We've had to turn on the AC in our home at 8 o'clock in the morning. Like, it's super, super hot. So you guys stay cool, stay hydrated, happy summer, have fun. I'm on Instagram too. Follow me at Michelle Cali Realtor 1111 and let's connect there. See you guys next time. Bye.